What are CEOs in the technology industry telling you right now? Net positive, net negative?
Look, there's a lot of optimism. When you're out here in San Francisco and you're dealing with this tech community, there's an awful lot of optimism. And the optimism comes from the fact that a lot of these companies are having a really significant impact on businesses, industries, a lot of change, a lot of disruption, and a lot of growth. And so this is certainly a place and a part of the economy where there's really significant growth. And growth generally leads to optimism. And so when you're out here, sure, there's a lot going on in the world in different ways, but as you're talking to companies in the tech sector, because of the growth that's available in that space, you tend to get, a more optimistic view than you might in certain other slices of the economy.
As that growth perpetuates, are they wanting to seize the opportunity to start coming to the public markets? Everyone's very hopeful with the Snap IPO being lined up, some part maybe in the first quarter. Will the doors open wide? Will we see the rest of the tech community in the private sector come to the public markets?
Well, there's certainly lots of capital available for companies that are growing, and obviously tech companies growing, there's a good amount of capital available. A lot of that capital is available privately, away from the public market. Last year certainly was a historically low year in terms of IPO activity, and I'm a big believer that these things kind of ebb and flow, but ultimately gravitate back to mean. So, we're hopeful and optimistic that we're going to see more IPO activity this year. But I think when you look at the world that a lot of these companies operate in, if they're able to run their businesses and they're able to grow and they're able to access capital privately and there aren't other pressures from shareholders or venture capitalists, these companies are putting off the opportunity to come to the public markets longer. And the reason they can is because the capital for growth is available privately. So I would expect to see more companies coming back to the public markets than we saw last year, but I think that process is going to continue to be a very thoughtful, methodical process for a lot of these companies as they're growing.
As you say, ebb and flow. We saw plenty of consolidation in M&A, perhaps while the cash balances were heavy. We might see yet more cash come if we see money come from abroad back into the United States. Are you expecting consolidation M&A to be high for 2017?
Well, M&A activity, especially in the tech space, is pretty active right now. In fact, we've been involved in, I think, 14 M&A transactions in the TMT space since the first of the year.
Yeah.
And that in that 6-week period, I think that's more than we've seen in a comparable 6-week period. I think you'd have to go back to the year 2000 or the late 90s to see that kind of activity around TMT-related activity. I think there are a number of reasons why that's occurring. One of the things that's definitely happening here is you've got a number of very, very large companies that are growing very, very quickly. Facebook last year grew over 50% on a $28 billion revenue base. Amazon grew, I think, 27% on a $130 billion revenue base. As those companies are growing, they're generating cash, they're generating market cap, but they're also taking away revenues in some way from some other businesses. They're disrupting to some degree. And that puts some of these other businesses in a place where they've got to think about their strategic options more carefully. So I think, broadly speaking, we're going to continue to see consolidation in the tech space. And, I think activity levels will continue to be high this year. If the environment stays, the way it is now, I think it could be a relatively good M&A year in the TMT space.